Hi everyone, thank you for watching my channel. This is Perry Trade. So I want to show you this trading strategy that I've been testing out the whole week. This is the Halftrend indicator that I've been using. So this is just one chart. I have the cumulative delta and also the ADX. So and also too, I have this. Let me see what this is. I don't remember what this is because I've been testing so many strategies. So this is a linear regression, right? A 20 period. So I'm using these as a filter so that I don't get fake signals off the half trend. The half trend is a very good trend indicator. So let me show you the other chart. So here I've been testing this right here. This is using the ATR, right, with a risk to reward ratio for take profit, right? So the total net profit 7630, right? The total gross profit is 22,585. So gross loss is 14,000. Yeah, I had some huge drawdowns right here, and max drawdown right here was 5,980. Don't worry about the dates here. This strategy was tested, I believe, in the 3 weeks because even though I had it running from July to July 26th, I only applied the strategy, I believe, on the 14th. So it's not for the whole entire month. So you can see here the profit factor 1.51. Let's see what else. Percent profitable 71%, which is pretty good. And also the average winning trade is 480 between the long and short trades, and then you can see the average loss trade is $787. So with the strategy, I'm using, let me show you. So I'm using a predator. And so basically what the predator does, takes these arrows, right? Use these arrows, these entry points, and it manages my trade. So if I go to my strategies, and do I have this on? Yeah, so basically it uses an ATR stop, right? ATR profit of 0.5. I can adjust these settings here. The profit target on the second contract is 0.5, and also I have a 3.8 multiplier. So I'm going to adjust these to see if I get better results, because I don't like the huge drawdown. So if you're trying to get huge reward, huge profit, then of course your risk factor would have to increase. So this is a pretty aggressive, I guess, strategy here, but it is profitable. Let me go out. So you can see here I went in here, and so I got a target here. See, you would have to withstand like big drawdowns here, if you want to stay in the trend. So if you got out here, you would have had a lot of a big profit here, but you have to withstand these drawdowns here, which I don't like that much. I don't like taking, unless you're a swing trader, you want to keep your keep your trade longer than for a few hours. Then yeah, you should be able to withstand these huge drawdowns and then get exit your trade here. So let's see. I got in here. You see my first target got hit here and then here. This was a good trade here, so I kind of withstand these huge drawdowns here, right? So it'd be great if I can get out here, so perhaps I'll go ahead and code the strategy so that it can follow the half trend indicator here, which are like moving average off the highs and lows candles here. So this is a pretty good indicator. I'm going to go ahead and add another indicator for confluence also too, to make sure that once I get in trade, for sure that trade, knowing for sure that this trade is going in that direction. So you don't want to go into a trade, for example, let's see, like right here. So you go into a trade, and the trade is the trend isn't that long, but still I still profited off of this one right here, so which was really good here. Let's see right here. So this is what you're trying to avoid here. You don't want to get into a trade where the market is flat. So this indicator does pretty well with showing you when the market's flat. So you see right here, like right here, it gave me a signal here, and I believe I got stopped out here. Did I get stopped out here? Yeah, well, my first target got hit, but I got stopped out on my second one. So here was just, so even though yeah, you have the green candle, it's giving you the signal, but you know, it's avoiding this right here because the trend isn't that long. Like here would be a good signal because you have this long trend going down. Here is just too short here. So I'm going to go ahead and see if I can have an indicator that would avoid this trade right here. This one right here it's okay. You have a couple of candles after the signal had printed, and then right here went flat, and this is pretty good. So that's just the one chart. Let me show you the other charts here. So the other chart used a different ATM strategy here, right? Same half trend strategy, right? This is the Heikein Ashi 15-minute, and I have another chart which is using the 30-minute Heikein Ashi. So I applied the same strategy and see what the results would be in the different time frames, right? So in the 15-minute Heikein Ashi, I profited 2,520, and then the 30-minute was 1,930. So let's just look at the trade performance really quickly. So gross profit is 4,040, lost 1,520, and my profit factor is 2.66, which is pretty good. So don't worry, I didn't start at 628. Actually, the actual testing began July 1st, and you can see here 61% profitable. I had 9 consecutive winners and 9 consecutive losers. Largest winning trade 1,600. Largest losing trade is 310. And this would be profitable. If you trade the strategy, it would be profitable. You would have $3,341. So here, every trading platform have this matrix here: the average MAA, average MFE, any average ETD. And so I look at those, right, and I kind of compare all of them, right? So the average MAE is basically what that means is your maximum adverse excursion, right? Adverse meaning negative. It's going against, you know, whatever direction you're going, it's going against you. So basically it just shows the maximum amount of loss in the open trade. So if once you go in a trade, you know, your trade go up and down, you know. And so that's the basically the maximum amount of loss. So basically kind of like your drawdown in an open trade. For example, I trade futures, so let me just give you an example using stocks, right? So if you buy a stock, for $100 and you hold it, you hold it for how many minutes you hold it for, right? And let's say the price, once you buy it at 100, the stock price goes to 95, but eventually you sell it when it go back up to $110, right? And then the MAE would be $5 because that's the maximum amount of loss that you had sustained when you were in that open trade, right? The MFE is basically the maximum favorable excursion, right? And so what that is the opposite of what I just explained. So basically if you buy a stock at $100, right, and let's say the stock goes up to 120, but then it goes back down to 110 and then you sell it, so your maximum favorable excursion is what is 20, because it went up to 120, because you bought it at 100 and then it went up to 120 and it went back down to 110. So the maximum favorite excursion is $20. So the ETD right here is what that means is, sometimes I get confused with the acronym. The acronym just means expected trade duration. So basically how long you've held the trade in that open trade that you have. You go into a trade for how many minutes or hours that you've held that trade. That is your ETD. So basically if you had 3 trades, let's say you bought 3 stocks, one stock you held it for 1 hour, second stock you held it for 2 hours, third stock you held it 3 hours. You divide that by the three trades, that would give you 2 hours. So the 2 hours would be your ETD. So that's what these numbers mean. So let's look at the equity curve really quickly. So you can see the equity curve, right? And then here what I usually do is look at my net profit for each of the trading days, right? And you can see here, I believe on the first day is when I was the most profitable, right? And I had some losses here and here. And also, I'll look at the time as well. Let's see, not on this chart. Okay, so, and then hours of the day right here. You can see at 10 a.m. the first day, that's when I had the most profit. 12 p.m. I had a loss of 85. 7 p.m. I wouldn't be trading at 7 p.m. So normally when I create automated strategies, right, like I'm doing now, I have other automated strategies that I have that are running, right? So I usually have them running. I'll have my most conservative strategies running 24 hours a day. So I just leave it on. I have, of course, risk management. I have a stop limit in case it goes down a loss of whatever amount that I have. So it'll just close out the trade or kill switch. And then I'll have some where I'll have them run at a specific time so I can watch it, So in this strategy right here, I just created a strategy, so it looks profitable. It looks pretty good. So I'm still testing it, and so right here you can see 12 p.m. I had a loss of 85. 7 p.m. I wouldn't be up looking at it. So here I'd be skipping this time right here, so I wouldn't have this loss here. At 2 a.m. definitely wouldn't be up at that time, so I would not have that loss right there. So yeah, pretty consistent numbers are, profit. I mean, it is profitable. So you can see that you're profiting every day. And let's see, let's go. So that's the 15-minute Heikein Ashi. 15-minute Heikein Ashi, and this is a 30-minute Heikein Ashi. So really, the higher the time frame, the more accurate the signal becomes. You get less fake signals. So right here, even though it profited less, but let's look at the trade performance really quickly. You can see here, net profit 1,900, gross profit 22. So I had a loss only of $330 here, and you can see the profit factor is 6.85, so which is pretty good, which is very good. Match drawdown is only $165, right? And you can see here I had 28 winning trade and losing trade 11. And the average winning trade is $80. Average losing trade is 30, right? Between the long and shorts. And you can see the maximum winner is 13. The maximum losers is 2. Largest winning trade is 1,300. The largest losing trade 125. You can see profit per month is 2,675. So this is a very conservative strategy. By the way, I didn't mention how many ticks that I'm using. So for this ATM strategy, I'm using 6 ticks, right, on the first contract. And once I reach 6 ticks on the second contract, it moves to break even. So most of the time, I would say, that once the second contract moves to break even, so the second contract is supposed to be a runner. So once I move to break even, there's no offset. So once they reach that break even point, the second contract moves, the stop loss moves to break even. And if the price continues to go down, if the momentum is strong enough, then I would move my stop loss to follow price, right? But the market is volatile; it's moving back and forth, So a lot of times when the second contract moves to break even, I get stopped out because it just goes in the opposite direction. I get stopped out. So for the 30-minute Heikein Ashi compared to the 15-minute Heikein Ashi, the trades are you have better trades and more. It's profitable. So that's basically it. So I will continue keep you updated, and thank you for watching, and please remember to like and subscribe, and I will see you on the next video.